TWO12. So TWO12 is a platform to democratize access to the cap table management software. So really revolutionizing that space. And with that, I'll turn it over to Dustin and Tiana.
Thanks, Nick. Great to meet you, everybody. I'll start off with just a couple slides to give you kind of some primer, a demo. Tiana is going to hop in to kind of give you her perspective on us and our team and our mission, and then we can hop into Q&A, and so kind of keep it as interactive as possible. Can I share my screen here? Okay, perfect. All right. So, all right. So my name is Dustin Byington. I'm the co-founder and CEO of TWO12, and we're a cap table platform for founders, investors, and accelerators. I started my career at Goldman Sachs in the middle of the financial collapse, and have been building low-level financial services technology ever since. I'm very passionate about the startup ecosystem. One of the key kind of pillars of my career has been this sort of realization that Fintech is effectively, you could categorize as the digitization of finance. We digitize things, they sort of hop on Moore's law and all these exponential curves. And one of the things, one of our core thesis around TWO12 is that cap tables are this last pervasive pillar of finance that is yet to be digitized. And what happens when we digitize cap tables? Well, like one, transparency. We get to know what we own, whether that's as a founder, understanding their ownership today, understanding how their notes will convert in the future, angel groups, accelerators, funds. All of these there's quite a bit of people flying blind today in terms of understanding what they own today and the future. And so digitization is a prerequisite to bringing that transparency to the ecosystem. Diversity and impact, something that we all want more of. And if you can't measure it, you can't prove it or manage it. So we think that, cap tables is like one layer, but, the financial information, but we also think cap tables are a great way of aggregating, pushing, pulling information and the metadata related to the cap tables, jobs created, impact, diversity, things like that. And then lastly, a connection. Connection is required to have real-time information. If we want to have transparency and ownership, and we all know it is today, at this moment in time, then we need to be connected. Connection, we also think, leads to expansion of the entire ecosystem. So going, but you said it sounds like the last presenter was focusing on APIs. We also have a deep focus on APIs, and APIs are really required to fulfill our mission of connecting the startup ecosystem. And they allow us to, we actually leverage our own APIs to build applications for funds, accelerators, and angel groups, which we really perceive as just, groupings of cap tables presenting with different view permissions. And our vision is to become the Plaid of cap tables. And so Plaid's integrating with banks, we're integrating with accelerators, funds, crowdfunding platforms, angel groups, and while they're analyzing transactions, we're analyzing cap table entries. And with that, I'll get into a demo unless anybody there's any kind of burning questions or comments before jumping into the product. All right, I'll get going. So, cool. So this is Relative AI. This is an AI startup focusing on clean water. And this is their kind of cap table moving through time on the top here. And this is a pretty complex cap table. We support companies from like early seed stage to late stage venture. And so we can we're good we can support the whole gamut of use cases. But here's a rather complex cap table. And so here's a series, you get all the way to Series C, and we have this FlatRock fund that's invested $6 million. And FlatRock's curious about, hey, how much, if I invest $6 million, how much is that going to return to me on exit? And so with TWO12, it's really easy to get transparency on these future scenarios. You just run an exit simulation, say, hey, in 2 years, what happens if the price is 355 million? We can create the simulation. This is all happening in real time. Boom, we can see that FlatRock here, their $6 million investment, 551% ROI, netting them $30 million. Quite a few entries in this cap table. Imagine having a lawyer kind of generate this for you. It's going to get quite expensive in a hurry. So there's a lot of cost saving benefit to the platform in addition to, and then we can save these simulations, we can edit them, we can share them. Lots of interesting things we can do. And I'm going to get out of here and show you some other quick features. Lots of reporting capabilities. snapshots, so we can go and look and see, okay, hey, what did my cap table look like when I was a Series A company? So here's the Series A status of the cap table. We can, oh, I gotta close this. We can see things like, we do valuations. All this, by the way, is $240 for a company. So this is part of the democratization angle. We think all companies need cap table management. So whether you're a seed stage or a Series C company, it's $240, as many people as you want, all the simulations we want. We make a lot of our money on our valuations. And so we run 409A valuations in a bespoke capacity. Because we have all this underlying cap table data, it's very efficient for us to run these valuations. We run them for $1,500, which is lower than market. And we have a lot of customers here pretty excited about it. And so we can come in here and gather all this information and spit you out your 409A valuation. And then sharing. And so this is kind of going to the connection piece. Now we have a cap table as a founder, and we can selectively push information to whoever we want to. So for example, if we have like a legal services, we could say, okay, Sharp, here, I want you to have access to all my cap table data, so you can run some analysis or make sure I haven't messed anything up. So that's kind of part, and then data room, auto logs. So there's lots of different features and functionality we have here, but really the goal is connection and transparency. And I can kind of show you real quick how this might unfold if we were to kind of looking at it from a perspective of an accelerator. So the accelerator will get also has their own kind of dashboard. It looks a bit different. And so the accelerators, this information is all being pulled in real time. They've got 16 companies, 4 countries, and they can say in real time, hey, 288 jobs created. We went through the impact of the Mass Challenge Accelerator, and we kind of built this to their specifications. And then we can also, because they're using these metrics to sell to their stakeholders, but they're trying to grab all this in Airtables and Wufoo forms. We said, hey, we can pull this for you in real time using these dashboards. Other accelerators like New Chip that we also work with, they take warrants, and so we built this single dashboard for them to track all their warrants and that are exercised and their preferred equity and whatnot. And then we can also track, this is kind of the metadata, the industry of your accelerators, where are you represented, which sectors are you represented, where are you making impact, and so these are the 17 SDG scores that we track, and so we can report on, and we're working on some really interesting things with the impact here. And then demographics as well. These are self-reported. Every cap table member could kind of say their demographic and ethnicity, and we can wrap that up and show that to folks. And then this is the 2 more things. So this is the cap table, the discovery piece. And so because Relative AI shared their cap table with this accelerator, when the accelerator's investors come in, or kind of like this scenario where you have investors that are coming to a demo day, they might want to query in a whole accelerator or whole investments group's cap table. So we can really easily do that here. So we'll just say hey, let's see how many artificial intelligence companies are in your accelerator. Okay, here's one of them. There's 3 of them. Maybe we're also looking for one that has a female-led founder. Okay, boom, there we have Relative AI. And so this sort of we're starting this first, selling this into defined networks with accelerators, but ultimately we see this as being a real-time competitor to PitchBook. And lastly, I'll hop into our fund. Tiana can talk more about on the fund side. She's our anchor investor in 212, and also a customer and advisor to us. But we have same kind of setup, a little bit more advanced for some of the funds and their reporting requirements. And here we can see, okay, here's their portfolio. Here's Relative AI with a $6 million investment. And then this is one of the features that the fund seem to like to invest. Relative AI can do their analysis on their exit scenario, but the fund can come in and say, hey, I don't think it's going to be 355 million. I think it's going to be 150 million. They can do their own analysis, and so give them the power to do that as well. So with that, I'll stop the presentation, and I'm happy to answer any questions, or I think maybe also it would be a good time to hand it over to Tiana.
Guys, do you guys have questions for Dustin?
Now's the time to begin. If anyone has questions, begin thinking of them while Tiana takes it over. Go ahead, Tiana.
So maybe a little background on me. I'm an angel investor. I started off as a company builder, raised capital for my own software company, and then left that 2017 to do investing full time. And then last year I raised a micro fund to start doing investment, and I wanted to do more of a portfolio theory so that I could, early stage investing is a numbers game. You can find an incredible founder and a great market and everything lines up and it still doesn't work. So you need to get a lot of investments in order to get that return for your LPs. And so as I was looking at that and trying to understand how many investments I needed to make, how I could track them and manage them, I came to TWO12 to help me solve some of those problems. So from a portfolio perspective, I wanted to get over 100 assets into my portfolio so that I could get that one unicorn in 100 potential. And when you're like making that many investments, it just becomes this Herculean event to try to get all the different types of paperwork that you have to try to understand like what your position in this company looks like and what that position looks like over time. One of the other strategies I have is with early stage companies, it's due diligence is not great. Like there's a lot of companies are just making stuff up. What really matters is how that company performs over time. So one of my other strategies is I write small checks and then I deploy them over time as I see that company making progress towards the milestones and metrics that we've talked about. So as you like write more checks and the valuation changes, it just adds more and more complexity to your portfolio. And when I've looked at other like products and services, like why I ended up going with TWO12, not just because I'm an investor, was like I needed something that could deal with the complexity of what that looks like and help me manage that realistically, because it's just myself and I have a fractional CFO. And in the last 6 months, I've made 7 investments. So it's like, that's a lot of paperwork, that's a lot of tracking. So that's my perspective on TWO12. And I've just really enjoyed working with Dustin and team.
Interesting. And Tiana, before you switch over to more Q&A, maybe you could just talk about the demand of LPs from your side, how that's changed and how TWO12 perhaps allows you to provide them with more information.
Yeah, so I'm part of an accelerator group through the Founders Institute, and they've launched a thing called VC Labs. And part of that has been they're looking to mentor new like emerging fund managers like myself that are interested in impact. So it's not just about, yes, you want your asset to have a return on investment, but you also want that asset to do something useful in the world besides just make you more money. And that has been definitely a thing that's in vogue right now. It's not just investing in women and minorities, but it's investing in green technologies and looking at I believe it's 17 different initiatives. It's actually over 100 that United Nations put out, but like they've really kind of like drilled it down to about a dozen that really matter, and being able to measure the impact that your dollars have. So like as an investor, like we're looking at it from the perspective of like the dollars that we invest now will become the reality that we're living in 10 years as those startups mature and have market penetration.
Interesting. Great. Does anyone have any questions from the audience? I'd love to open it up to anyone that wants to jump in. Let me give 5 seconds of awkward silence and then I'll ask my own next question, but love to have anyone jump in right now. And okay, so I'm up, I suppose. One thing that I've been tracking a lot is sort of I would call it the hollowing out of the Series A. So a lot of investments that were Series A 5 or 10 years ago are now either becoming seed or a later stage. And I think part of that is new tools like 212 coming out that allows for easier access to sort of some of the baseline metrics and the baseline needs of an early stage company, so that they can easily succeed or easily get past their initial MVP stage. And so tools like this really and things like cheaper cloud computing and everything else that's now available to startups makes it a lot easier for early stage investors to provide a little capital and really see these companies through to that next stage. And I think 212 is an excellent example of just that as well.
We kind of see it as like in a similar family as like QuickBooks or TurboTax. Our solution is $240 a month. 220 bucks a month, 240 bucks for the year. So it's sort of like set it and forget it. We have, customers that come to us and say, hey, Carta just hit us up with like raising you round. Carta hit us up with a bill for 8,800 bucks. We need to get off this immediately. And so you don't have clarity about how much these services are going to charge you in the future, which, as a founder, you're trying to budget for things, it gets kind of hairy. Also, we're actually beyond feature parity with Carta. Carta only allows you to model one round of financing, where we have this really robust modeling engine that we give away for everybody. With Carta, you don't even get that until you're in paying about $10,000, I believe, that kind of third tier package. And so we feel like that's a birthright feature that founders need to have this transparency. They're the ones taking all the notes and making the big mistakes for their company. And so we're very founder forward and excited to support the founders with this underlying technology.
Mm-hmm. Yeah, absolutely. And before we go on to the next presentation, if there's any other investors on the line that wants to hop in here, I'd love their take on this about what is it that they're missing from early stage companies that they look at that they would like to see more in a platform like 212. Is there more information that they consistently are missing out when they're doing their first round of due diligence? I'd love to hear some perspectives on that.
I could probably add to it. And then if there's any other investors. So you brought up this glaring hole in the market, the pre-seed seed stage. And what I've seen is that a lot of venture capitalists are trying to move downstream past the A round. And I think that there's kind of like two, maybe three main factors for that. So it's like, one, in order to make the risk and the costs and the time commitment for a fund make sense, you need to be raising over 20 million at least in order to sustain yourself with management fees and things like that. And what that means is that most funds are under 30 assets, and the heuristic is probably closer to 18. And so you're having to write bigger checks. So you really can't write a small enough check. It just becomes too much labor to write those little checks. So that's one aspect of it, is just the economic stuck. Right. And then on the other side is the risk. So for a pre-revenue company, it's at least 3 times as risky to write those checks. And the management of that, it's just a lot. And what a lot of VCs are doing is you write a check based off sort of that fast thinking of okay, do I like this founder? How do I feel about them? This sort of stuff, when it's that early stage piece, when the reality is they basically just have a pitch deck and a personality, and that's it. So how do you manage that sort of stuff? And so, I mean, that was another reason that I was looking for tools that could help me move out of fast thinking and be able to manage being able to write lots of little checks over time.
Right, and that trend is seen throughout the industry as well. Institutional VCs now are sort of crowding into the later stages, because if you have $100 million fund, it's really hard to deploy this at scale and really put that money to work in Series A or earlier. And then seed and pre-seed is getting crowded as well. So if you're focused more on seed and pre-seed like you are, Tiana, you need some sort of tools that will allow you to manage these growing cap tables.
Absolutely. Yeah.
Interesting. Any other questions from the audience before we let Dustin go?
Great. Well, thank you everybody for having me. If feel free to reach out, Dustin at 212.co, TWO12.co. If you're looking for either a founder, accelerator, fund, angel group. We also we're gearing up for a Series A. We have a little bit left in the seed, although I think it's mostly taken down. But if anybody's curious, we will be raising capital over the next few months. So feel free to drop me an email.
Great. All right. Thanks a lot, Dustin.
All right.
Thanks, Tiana.
Thanks.